What is unique about serving real estate investors? As a bookkeeper, real estate investing, the industry is so different from other industries as far as what the back end accounting looks like, and everything that is required, right? So what do we need to know about serving real estate investors and how serving real estate investors is different from other industries? Okay, so let's start with number one. Multiple different entities 99% of the time. Okay, so when we get a real estate investing client or a prospective client, 99% of the time they're going to have multiple different entities, right? Some of them will have an entity, per property, like an LLC per property, and some of them will have, a management LLC and then subsidiary LLCs, and everything's passed through. Some of them will have some sort of holding or management LLC, and then a rental LLC for long-term rentals, and then one for short-term rentals, and then one for the flipping business, one for the wholesaling business. There's a lot of different variations and things that we see on a daily basis. Okay. That being said, we need to know, which of their entities file a separate tax return, and if they file something different, like an LLC filing as an S corp, different from what the entity actually is. We need to know their entity structure. We need to have all of that figured out before even giving them a quote for bookkeeping, right? So each filing entity must have its own QuickBooks Online subscription. Okay. If not, their tax professional, when it hits tax season, is going to be very upset with us and with them. So ask us how we know. So a scenario where you can have multiple different entities within one QuickBooks account is maybe when there's a parent entity like I just described that files a return, or is even just another pass-through entity, right? So up top. And then there's subsidiary entities that hold properties, and each is a pass-through entity. Okay, so in that situation, there's still only one tax return being filed, even though we may see 20 LLCs in this structure. There's only one tax return being filed, so we can keep up with all of that in the same QuickBooks Online account. Okay, because for that top entity, that's going to be the overall balance sheet for the return that's being filed. Everything underneath is just pass through, and so each of those individual entities, we're gonna keep up with those using the business feature, the business tracking feature, or the location feature in QuickBooks. So that's how we're going to track all of those within the same account. So every single transaction is going to have a specific entity designated to it, even if it's just a general business transaction that was at the top parent or management entity level. It's still going to have an entity designated to it. Okay. And so we would set up, a business or a location within QuickBooks for every single entity, even that top level entity. Okay. Now, if there is an active business and a passive business, so like a long-term rental business that's like managed, and it's considered passive in the eyes of the IRS, and then there's maybe a flipping business that is considered active in the eyes of the IRS, those need two separate QuickBooks Online accounts. Now, there are some scenarios where a real estate investor is primarily a rental real estate investor, and they have a big rental portfolio, and let's say they flip one property a year. In that circumstance, and they do it under the same entity with all the rentals and everything, right? In that circumstance, that's kind of like an exception. We're not going to create an entirely different QuickBooks just for that one flip that they did during the year. Now, if they're starting a full-fledged flipping business, then we're going to separate everything. Okay. But for odd situations where they're just going to flip one or two properties in a, given like in an entire year, we will keep that in the same QuickBooks account as long as it flows through the same entity and the same, financial accounts. We'll keep it in the same QuickBooks, but that's an exception. We don't normally like to do that. Okay. So, all entities, have to have or all transactions that come through the financial accounts have to have an entity designated to them, unless you're only keeping up with one entity in the QuickBooks account. Okay. So if there's just one entity, and let's say it's a flipping entity, and that's all they do in that one QuickBooks account, or that's all we're doing for them in that one QuickBooks account, then we're not going to designate an entity for every single transaction, right? Because everything is for just the one entity that the QuickBooks account is tied to, if that makes sense. Okay. All of this being said, there are very, very few transactions that we can automate within the bank feed, with like designating a rule and it automatically categorizes transactions. That is a thing in other industries for sure. That is not much of a thing serving real estate investing clients because most, if not all of their transactions have to be tied to either an entity and or a property, right? So getting into property specific transactions, this is number two of kind of what makes real estate investing, serving real estate investors different from other industries is, 95% of their transactions are going to be tied to a property. Okay. They will have general business transactions, absolutely, just like every other business. And that'll be tied to, just the entity or the top level entity or however their structure is. It depends on their structure, but those will not have a property designated to the individual transaction. But 95% of transactions will need to have a property designated to the transaction. Okay. Either we use the customer feature to avoid the 40 class limit. But the class feature is awesome. You can definitely use the class feature. You can use the, whatever feature you want to use, even for whatever software you're using. I'm using QuickBooks for this example because that's what we use. So whatever you use to designate properties, 95% of the transactions that you see with a real estate investor are going to have a property designated. So that's where it pays to have like, a financial account per property, or just to have some sort of organization for their financial accounts. So their credit cards, their bank accounts, their lines of credit, all that stuff that we link to the bank feed, right? Within the tax return, depending on how they're filing, right? But within the tax return, each individual property has its own forms, okay, for like depreciation and even like almost like an income statement for each individual property within the tax return. So each individual property is almost treated like its own business, right? So it has balance sheet, it has depreciation, amortization, it has an income statement, so income and expenses. So we are required to keep up with each property for the real estate investor, with all of that, right? It has a tax basis, it has all the balance sheet accounts, it has income and expenses. So, but even if we weren't required to keep up with per property transactions and statements, we would want to for the real estate investor because they want to see how each of their individual properties are performing, right? So hopefully that makes sense for you. Number three, lots and lots of partnerships. So true partnerships, as in, it's a multi-member LLC and, maybe there's two partners and it's a 50-50 partnership and they share in the equity of the business. So we see a lot of that. We also see a lot of joint venture style partnerships where they're just partnering on one deal. And so, that's, the partner doesn't have equity in their business, but they have, they have equity in the deal that they're partnering on. Okay. And so, and then we have private money lenders, which people frequently get confused with like partners, right? Or investors, but that's something different. Okay. And so just lots and lots of partnerships. The more you deal within the real estate investing industry and the more you learn about it, you will learn about, the difference between all the different partnerships, but there are different ways of accounting for each different type of partnership on the books. Okay. On the balance sheet and as well as on the income statement. So there can be some complication there. Number four, real estate investing is super duper asset, loan, escrow, and equity heavy, right? The balance sheet is an absolute beast. The way we do our custom real estate investing chart of accounts and the way we account for multiple entities and properties and all of that within the same account, our balance sheet still stays relatively concise and readable. But if you don't account for things in, the way we account for them or a similar way that we account for them on the books, you're going to have an enormous balance sheet. Like I've seen some, prospective clients who have come to us. I've seen balance sheets that are 6 pages long because they have each individual property, listed on the balance sheet on the main, overall balance sheet for the account, with all the different sub accounts and everything. Right. So, if someone has 30 properties, that's gonna get long very, very quick, with all the, asset accounts, loan accounts, so liability accounts, so escrow accounts, equity accounts, so like member equity and then partner equity. And so it gets pretty crazy pretty fast. So that's something that is very different from other industries. Creative finance. So seller finance, and some people call it owner finance, subject to, so purchasing a property, subject to the mortgage. and then a combination of different financing, right? So to purchase, and this is in, on the same subject as the balance sheet, right? All this stuff goes on the balance sheet, and you have to code these things in different ways and account for them in different ways, and you also have to know what they are. So if you don't know what seller finance, owner finance, subject to just the creative finance kind of bubble is, make sure to research that and learn about that, because you're probably going to immediately see some sort of creative finance with your first real estate investing client. Okay. Most, if not all of our clients use some form of creative finance. Even if they get a hard money loan, they may, raise money from a private money lender to cover the delta. Or maybe they're purchasing the property subject to or with seller finance. So that's its own, kind of set. And then they raise money on top of that to do renovations or something like that. So there's always, different combinations of different loans for one property to ensure that they are putting down as little cash as they can put down for each property so that they can spread their cash out or just keep their cash as reserves. But there's just so many different scenarios with creative finance. So that's something that is way different than other industries, and definitely something to learn about. Number 6, lots of different activities within the real estate investing space. So, our clients, they flip properties, they wholesale properties, they have rentals, which could be, residential versus commercial, long-term rentals, short-term rentals, midterm rentals, like renting to traveling professionals, like traveling nurses. New development. We don't personally do much with new development currently when I'm filming this video, but our real estate investing clients do a whole myriad of things. And then number 7, real estate investors usually own other types of businesses in addition to their real estate investing businesses, right? So we have clients who they literally do all of what I just said. They flip properties, wholesale properties. They have rentals, and they also have maybe a plumbing and excavating business, right? And so there is opportunity with real estate investors to capture those other businesses and other income sources and do the books for those that they are associated with or that they own. But that's just something to know, right? And what I'm really getting at is real estate investors are extremely busy. Like, we have clients who have full-time jobs, have a spouse, have small children, and also have a full-fledged real estate investing business with like 30 rentals, and they also flip and they also wholesale. So it gets crazy pretty fast as far as their time and their priorities and just how they're managing everything. So that's communication is huge. You will need to follow up with real estate investing clients, probably more so than you do your non-real estate investing clients, because they're just so short on time. They're always running around job site to job site. And also dealing with the other businesses that they own, or their part-time job or their full-time job, or whatever the case is, right? We see a lot of different types of real estate investors at different stages in their lives, and with different structures as far as their professions go. So communication, that's extremely important. We try to follow up with our clients every couple of days if we need something from them, and then we have communication escalation. So frequency is very important, but escalation of communication is also very important. So if you don't hear from them, via email, and you need stuff from them to action their books, which you always will need stuff from them, because there's very little we can automate with real estate investors' books, right? So you always need documentation information from them. So send the email, they don't respond, then maybe shoot them a text to their cell. If they don't respond to that, maybe you call them, or you attempt to schedule a call, right? Leave them a voicemail and then attempt to schedule a call with them. So you need some sort of escalation process. If you have others, within your business, then you need to escalate it to management, maybe the COO or kind of whoever is managing your bookkeepers. So make sure to have frequency in place, some sort of structure for communication frequency, and then some sort of structure for communication escalation. Okay, very important for the real estate investing industry. But I just want to say, so everything I said above, it sounds like a negative, but it's absolutely an opportunity to help an industry that is 100% struggling, right? With time, with energy, with cash flow. Like, there's a whole, with just knowing their financial picture, right? Knowing their numbers. That is a huge struggle within the small mom and pop, real estate industry that we serve. So this is a massive opportunity to help them with everything that I just went through, and so much more that I'm not going to talk about in this video because it'd be way too long. But there's a massive opportunity for us at being the bookkeeping professionals that we are to serve these people and to help these people. Okay, it is more complicated as far as the accounting is more complicated than other industries. It's more time consuming than other industries. It is more of a manual process than other industries. But that is where the opportunity lies, right? We charge more than the average bookkeeping firm charges, who serves maybe just general businesses, because we do specialize in this industry and everything I just said, right? So everything is a little elevated from my experience, working with other industries. So, but huge opportunity here. Okay, so that's kind of the moral of this story. All of this being said, there's a huge opportunity. Our services are needed. We need more expert real estate investing, specific, savvy bookkeeping professionals. We need way more than there currently are who actually know what they're doing and provide a great service to real estate investors. Okay. Thank you so much for your time. On to the next video.